What's up, Mortgage Coach community? I've got a first-time special guest, Amit Singh. What's up, Amit?
Hey, Dave. Good. Not much. How are you?
I'm doing good. Thanks for making time to come in and share with the Mortgage Coach community what you're doing and how you're doing it.
Absolutely happy to be here. Excited to share what we have.
Yeah. So guys, here's what I know. He's friends with Socia Vala. That's how I met him. I was actually local at a local place that Socia and I are clubs at called The House. Shout out to The House in Newport Beach.
It's an awesome
And
place.
Socia and Amit were meeting, and I happened to be going there with my real estate agent, Brennan Rose. Shout out to Brennan. And we talked a little bit, and I found out, hey, we've got a top mortgage coach, black belt, someone that is data driven. You know, he had a lot of stories to share around how he's using sales Boomerang, and I know he's doing 75, on pace for doing 75 million this year. And from my perspective, anybody who's doing 75 million a year in 2022 is doing some things right. So we're going to find that out. So Amit, tell us a little bit about your mortgage practice, and then let's find out how you're winning in this market.
Yeah. So I've been in the industry for almost 10 years now. I run the Insight team here at Neo Home Loans. Production has definitely dropped this year comparative to last year, but we're still doing pretty phenomenal business in this current environment. And I think a lot of it has to do with the way that we are really converting clients right now and really helping all of our real estate partners generate business through that conversion. And a lot of that has to do with not only sales Boomerang, but a lot of it has to do with the TCAs and MortgageCoach. But I think the loan officer that's going to be succeeding in the environment that we're in right now has to be able to convert from a data perspective, because right now there's so much confusion, so much noise in the media right now that's really hindering a lot of people from making a decision. That if we can use the tech tools that are really necessary and that need to be in our arsenal to ultimately create that conversion in a client's mind, that's really the only way that we're going to be successful in this environment where interest rates have jumped up so dramatically.
So let's talk about the problems you're seeing in the market today. What are the challenges? Just list like the top 3 challenges you are seeing for both yourself and for real estate agents.
Yeah, I think number 1 is affordability, right? That's the biggest issue that we're facing right now. Is when I look at the clients that we have today versus the clients that we had a year ago or 2 years ago, right? The majority of clients that we have today, they're either really, really well qualified and have no problems with interest rates, or what probably 75% of them are at right now is they're struggling to qualify, or they can't find a home that's in their price range because rates have moved up so much. So that's probably the biggest concern. The next concern is, bulk of our business has been coming from real estate referrals, right? And obviously right now, real estate referrals are probably at their all-time lowest. And so that's been a driver of a downward trend in our business. And then the next concern is going to be, how do we shift in a market that's dramatically changing, not from like an interest rate or pricing environment, but truly from a direct to consumer perspective? And how are we going to create an environment where we aren't beholden to real estate agents to ultimately get our business? We're actually going direct to the consumer, and that's going to be through social media and whatnot. And so that's kind of our big focus for the end of this year, and it's been our big focus throughout this year and through 2023.
Love that. And I definitely think I can intuitively see those challenges. If you were an agent, just based on what you've heard from agents, what would they say their top 2 or 3 problems are in today's market?
I would say conversion is probably the biggest issue, right? There's a lot of people out there right now who are interested in buying a home, know that the right thing to do is buy a home, but they just don't know how to get started, or they don't know how to really come to terms with where interest rates are at right now and where their mortgage payment would have been a year ago versus where it is today. So conversion is going to be it should be that real estate agents' biggest focus right now, and they should be focusing on how to deliver the data the same way that a lot of loan officers do right now, in a really technical sort of way. The other concern would also be, how do you get access to the consumer right now, right? Because business has dried up so much that the only way to get new business is going to be to put yourself out there with personal branding, with social media and whatnot, and having the right tools in place to be able to create new leads out of your social media is going to be a huge focus for what real estate agents really need right now.
Yeah, no, and I think those are going to be the same challenges as we move into next year.
Absolutely.
So let's, before we get into solutions, because I'm going to go, okay, well, what are your best solutions to these problems? But what do you think the biggest opportunities, and maybe it's the same, when I, sorry about that. When I ask you what opportunities, maybe it's a solution, but what do you see as some of the biggest opportunities for today's mortgage professional?
Yeah, I think it's finally an environment where the cream can really rise to the top, right? The best loan officers, the ones who are doing all the right things, doing the right things online, on social media, doing the right things from like a client perspective and delivering data to your clients in like the most effective way, through the appropriate technologies and whatnot. Those are the opportunities right now for the people that really dive into that, understand it, learn it, and execute it on it at a really high level. Those are the people that are going to be highly successful in this industry. The people that are maybe just have only been focused on refinance transactions in the last couple of years, if they're not pivoting and, basically adapting to the new age that we're in, they're going to get left behind, unfortunately. And, but, that's an opportunity for more real estate agents, more loan officers who are doing the right things to gain more market share in that way.
Hunter Markwart, who's a good friend of mine, sent out a leadership newsletter over the weekend. It's called Sunday Thoughts from Hunter. And he had made a claim that, most like the loan officers are just out of shape from a sales perspective. Do you feel that way, that, the lending industry as a whole and that loan officers as a whole, when it comes to, being sharp and really having great sales skills, out of shape for the most part?
Yeah. I mean, unfortunately the last 2 years, right, have been an environment where you didn't really need to do any selling, right, to get a deal, right? Rates were so low that the rate basically sold itself. And so in the environment that we're in right now, I don't like to use the word selling because I don't ever feel like I'm selling a client. I'm truly just educating them and showing them why it's truly financially irresponsible for them not to own a home, even in the environment that we're in today. But yeah, I mean, the last 2 years, like I said, right, it's been a breeding ground for, I don't want to call it laziness because everybody's working their asses off the last 2 years, but at the same time, like, you weren't really sharpening your tools. You weren't sharpening your mindset. You were just basically selling debt at that point. Now, the environment that we're in is going to be, it's incredible because we've been doing this for the last 10 years. But it's going to be taking the sharper, the more savvy loan officer, the one who's more technical, the one who's more advanced or eloquent in, speaking about the opportunities there are in this environment, and truly showing them and educating them why or what options are really going to be in their best interest here in the short term, and gravitating away from all the noise that the media is creating there as well, and being able to kind of navigate through that.
All right, now this is my favorite part of the conversation. We're going to pivot to what's working and what are some of the best solutions that you're deploying in the market and strategies that are really working for you and the team today.
Yeah, I think MortgageCoach has been for us one of the biggest conversion tools that we've used. Right, there's only so much that we can say. There's only so much that we can talk about. But when a client actually sees in like a screen share or in a meeting, when they see the numbers put in front of them, when they see the long-term and the short-term wealth impact, so that they can see where their money is actually going if they were to purchase a home versus continuing to rent for the next 24, 48, 60 months, right? That's where the actual conversion of a client who's maybe confused or uneducated or concerned or fearful about the market that we're in right now, and they see that even with where the numbers are at and even where with interest rates are at, given where rents are expected to go over the course of the next few years, they can see what that money is actually going to be doing for them. That takes that concern, that fear, that anxiety, and really transfers it into confidence, excitement. And, for our real estate partners, most importantly, it turns it into motivation for them to get out there and start aggressively shopping for homes, because again, they know at that point that it's financially irresponsible for them not to purchase a home in the near future. So that's why we really love the TCA tool. It's allowed us to show so many awesome financing options. It's allowed us to show not only the now, but also project out what the future is going to look like. So that way the client can actually see, okay, well, yes, interest rates are where they're at right now, but here's where they're expected to go. Here's what those numbers are going to look like inevitably. And so that really helps kind of shift that focus from the right now to what could be in the future.
Well, I obviously love hearing that that's a solution you're deploying. Let's kind of pause on that, and maybe we'll
Yeah.
come back and have you share, a specific case study, like where, hey, this is how I help a customer get more personal clarity so that I created conversion for a realtor. But I just want to kind of unpack all the different solutions. What else? What's another solution for you in today's market that's fueling your success?
I would say one of the big things that we primarily focus on is managing our database at the highest level, right? And that's really how we've been able to pull a lot more opportunities and transactions out of the database that we worked with for the last 10 years. So I love the sales Boomerang tool, one, because it kind of gives us a target to work towards. One of the biggest things that I had my team focus on over the last 2 years was targeting all of our equity alert clients, right? So many people over the course of the last 2.5 years have built a tremendous amount of equity in their homes. And so many people just absolutely don't know what to do with it, right? They're just not educated on the opportunities that they have to leverage that equity. And so over the last 2 years, the amount of people, we've found a tremendous amount of clients who we've just basically reached out to because they were on our equity alert. They had 30-40% equity sitting in their home and they weren't doing anything with it. They were in a good financial position. And so we showed them, and I can't tell you how many over the last 2 years consultations we've had with clients where we've shown them how they can either open up a home equity line of credit or do a cash out refinance, take that money, ultimately purchase a new investment. Now, that doesn't necessarily need to be in the same area that they're in, especially in California. It's hard to buy investment properties in California without a substantial down payment, but we've helped a tremendous amount of people take the equity that they've built in their homes in California and purchase homes out in, North Carolina, Florida, Tennessee, right? Areas where there is more opportunity to be cash flow positive or cash flow even on the home. And that's how we were able to ultimately find a tremendous amount of new transactions, right? And getting licensed in those other states was super helpful for us in our business, simply because it just allowed us more opportunities for the California clients that we had to build more opportunities out for themselves in other areas. So equity alerts was huge. Trying to think.
Time out before we go past equity alerts.
Yeah.
I love, and you said you've done it so many times, if you wouldn't mind just sharing the approach, and you get the alert, whether it's through your CRM or it's an email.
Yep.
It's through our sales Boomerang dashboard. Give me a flavor for what the reach out would be to the client. Is it a phone call and an email? Is it an email, a phone call, and a text? What's the strategy and what's the approach to go from, I have a signal in a database that there's a family that can use my services? Walk us through how you approach that.
Yeah, so it's kind of a team effort for us, right? So we have our customer success manager, whose sole job is to kind of continuously follow up with our clients year over year, just to kind of get a download on what they're doing. And so when we have equity alerts, primarily his main focus is to reach out to those clients with a phone call, a text, and a phone call and a voicemail, and then a text if he doesn't get a hold of them. And basically he's just reaching out, very warm, very friendly, saying, hey, we helped you with your mortgage. We're basically making so many of our clients aware of the opportunities that the current environment that we're in have been bringing out. And I'd love to schedule a time for you and Amit, your mortgage advisor, to go over what those opportunities might look like. We leave it a little bit vague, but we also kind of give them just a high level that, hey, you have some amazing opportunities to really build wealth here. Let's schedule a call and get on a Zoom, right? And so that's where we'll basically, we'll ask them for a copy of their mortgage statement before that Zoom call with them, just so that we can get an idea of exactly where their loan is at. For the most part, we usually have all of that information, and we'll just do like a amortization calculation to figure out where their current loan amount is at, or we'll use your guys' tool where it says where their loan amount is at. And basically we'll just kind of show them, hey, this is what it looks like. to do a cash out refinance. You already have an awesome rate, but hey, cash out refi rates weren't super bad.
Right.
Or we look at opportunities to open up home equity lines of credits, right? I think a home equity line of credit is a tool that everybody should have on their home. And so a lot of our clients, after meeting with us, we would connect them with a home equity line of credit provider. Now we do offer home equity lines of credits, which is really exciting too. But ultimately, we would show them, hey, if you leverage 60, 70, 80, $100,000 from your current home, here's where you can take that money, purchase a 4-bedroom, 3-bath house in Tennessee for $400,000. And now you've got a cash flow positive property, right? Because of where interest rates were at last year. Now it's just obviously a little bit more tough, but there's still tremendous opportunities out of state to be able to buy those homes. And so that's been our primary focus, is just creating the TCAs, showing them what their current mortgage payment plus the HELOC is going to look like versus what the new investment property is going to look like. So that way they can see kind of the cash flow and see if that's going to be something that makes sense. And so many of our clients have found that it did make sense. And so they've pulled the trigger on that.
So guys, let's put this under the category of wealth with real estate. They're in a market, Southern California, right? You're Orange County, California. There's been a tremendous amount of equity growth, and they're letting people know about the equity they have, and then they're showing them how to get access to that equity, and then they're showing them how to invest in properties in other markets that might be more affordable to leverage that equity. So that's, by the way, super interesting, super smart. When you look at some of the trends and some of what was it we just heard, that Chase is going to invest, how much in real estate in America. So, I mean, the amount of big, smart money coming into residential real estate is something to really pay attention to. And it sounds like you're using the sales Boomerang equity alerts. Heads up, want to make sure you know the numbers.
Yep.
And then making sure that you're showing them investment strategies in other markets. Super interesting. If anyone's watching this and you have questions for Matt, put those in comments. If you're watching this in our YouTube channel, put those in questions. Do you have any case studies, anything that you could show, where maybe you showed a total cost analysis to a family and drove conversion for a realtor and value for a borrower? Anything come to mind?
Yeah. I got to probably take out some names here just so I don't get in trouble. But we have a client who we'd helped, here's an example that I have. Am I able to share my screen?
Yeah, go for it.
Awesome. All right, so. I'll
tell you what I see. And I'm going to go look for any questions. We got this streaming live in the Mortgage Coach Facebook group, guys. So if you're not already in there and you're not already subscribing, there's almost 17,000 loan officers strong and growing by hundreds monthly in this group. Go ahead and check that out. And this will be in the Mortgage Coach Facebook group within hours, or excuse me, Mortgage Coach YouTube channel within hours. All right, so we've got a rent, a payment with HOA, a payment without HOA, and a refi. So I'm looking forward to hearing what we got here.
Yeah, so this is a client that we worked with just a few months back, and they'd come to us after working with 3 other lenders. They weren't able to quite qualify for the purchase price that they were ideally looking at. And they were also really, really concerned about what the monthly payment was going to be, not only in the short term, really realistically, because the wife was on maternity leave and she wasn't expecting to go back to work for another year, maybe year and a half. And so he had met with a bunch of lenders, and they'd basically not shown him any options that would get his monthly payments below $3,800 a month. And they wanted to be basically right around $3,200 a month max. And so we used our strategy when we finally got a chance to meet with them to show them what obviously a seller paid buy down would look like. So we explored basically doing either a 2-1 buy down or a true permanent buy down, which they ended up deciding that a permanent buy down made more sense for them. But basically we were able to get a $15,000 concession on a home that they were interested in. And what we showed them was, okay, you can take 10 grand of that and basically buy down the interest rate, here to 4.75%, save an extra, 5 grand for closing costs and whatnot. And ultimately they would have a monthly payment of basically $3,500, right? This is what their total monthly payment was going to be. Or we could take 10 grand of it to buy the interest rate down, take the other 5 grand and actually pay off their HOA dues for the first 12 months, which would allow them to save basically another $400 a month there, right? So for the first year, at least, which was their main concern, they would be able to have a monthly payment that was sub that $3,200 a month. And ultimately longer term, we were able to show them opportunities that, hey, if rate, right now they're at 4.75, but down the line, they end up getting their rate down to, let's say, 3.25, right? We were just kind of setting some hypothetical scenarios down the line, right? If we did that down the line, they could end up getting their all-in monthly payment inclusive of the HOA dues at that sub $3,200 a month mark. And they're in a home that's going to ultimately fit the bill for what they're looking for at least the next 7 to 10 years. So that was a really great scenario that was a huge win for our team and a huge win for our agent partner, because that agent partner had, basically, it wasn't actually an agent partner that we were working with originally, but that is an agent partner that we're working with now, because after they connected with us, it basically highlighted the differences, and they were super ecstatic to now start sending business our way because they saw that we could convert at a really high level. But that was one of the specific examples of like a huge win that we had, that we were able to do some content on, that we were able to, open the door for a lot of new opportunities in terms of new business referral relationships as well. I'm sure a lot of the people here have seen the rent versus buy analysis and whatnot, but specifically being able to show them this in a really friendly and easy to understand way was something that they really appreciated, one, and it allowed them to get into a home with a much, much lower payment than any other lender had kind of shown them, simply because we took the time to analyze what their options were, had a tool that was going to allow them to easily understand it, and then allow them to execute on it.
I love it. So as we go into wrap up mode, I want to do some rapid fire questions, because one thing that I find is that loan officers and lenders, they're not, one, they don't know their database, and they think database is just past clients. Like they just think, oh, people that I closed a loan for, and they forget, no, your database is everyone you've run a credit report. It's everyone that's called you. It's all your, realtors, CPAs, financial planners. And then I'm seeing more and more loan officers actually adopt databases from realtors. So my first question is, are you doing all these things? When it comes to building your database, are you capturing your database from all these sources? And are there anything else you're doing to build your database?
Apart from those things that I'm seeing there, probably not anything additional. I'd love to hear if there's other people that are doing some cool things, but I think the big focus for us right now has been adopting a lot of our agent partners' databases, just because we know that a lot of realtors aren't following up with their database with super, super valuable information. They're just checking in on them, which is fine, and that's totally okay.
Most loan officers and lenders, they spam their database.
Exactly.
They're not sending things that have relevance or timely value.
Yeah. So what we've been focusing on is basically all of our agent partners who have big databases, right? Let's get them into our system. Let's get them set up in Sales Boomerang, and then let's shoot out some video content for them. Like, let's show them what some opportunities might look like. See if we can get them to bite on setting up a meeting where we can go through their holistic financial situation and see if there are opportunities for them to create wealth, or create opportunities to acquire more real estate down the line. So that's been our big focus for the last like probably 10 months or so. As business has kind of started to dwindle down a little bit, that's been our primary focus, is helping our helping our agents by reaching out to their databases in a really meaningful way, and setting up times for calls, setting up opportunities for new transactions to occur, or at least projecting out our future transactions. It may not be this year, it could be next year or the year after that, depending on what the situation is with that client. But at least we had the conversation up front now to figure out what their goals are going to be, or what some of their future planning is going to look like, so that way we can make sure that we get them when that time comes.
I love that. So guys, make sure, all of these areas and ways of building your database, you're doing it. In Amit's case, Amit, it's check. They're doing it all. And then guys, the next part is make sure that you're communicating with clarity and confidence to agents that, you know what, I got you. You know, most agents' database looks like this. And even if agents wanted to, they can't get a lot of the alerts that a mortgage professional can get. You know, everyone in the Sales Boomerang platform is getting, you know, countless signals in their database, hundreds of signals every day. And then we're able to create insights. I mean, a very common insight is a mortgage inquiry. But I would just tell everyone that that is the most commodity insight, and it's the most defensive insight, because all that's telling you is someone's getting ready to cheat on you. You know, they already are cheating on you. They ran an inquiry and you didn't know about it. You know, but and I also want to remind you guys, we have scripts. By the way, Amit, what is the script you guys use, you know, on this type of an inquiry alert when you call these? Anything you want to add there real quick?
Yeah, I mean, it really kind of depends on who the client is, right? If this is like a client from maybe 6-7 years ago and we hadn't really implemented all the things that we've implemented in our business today, it's going to be tough to win that client back, right? Because we didn't really show the value that we're showing today, maybe 6 or 7 years ago. Maybe we just had really great conversations, but nothing truly valuable that the client found. And so that's probably why they were ultimately shopping for another lender. If I see a client who I know we had a phenomenal experience with, we showed a tremendous amount of value, have a mortgage inquiry, I almost take it like a personal affront. But, you know, the good thing is, like, you know, a lot of times it'll be like, oh, well, you know, you helped us with their home in California. We're now moving out here. We didn't know if you could do a loan out there. So our realtor out there recommended us to someone. And I'd be like, no, don't worry, I'll get licensed there right now. But ultimately, you know, it's the reaching out is really like, hey, you know, we ultimately helped you with your home purchase 5 years ago. You know, I remember your transaction was really awesome. I hope you guys had an awesome time working with us. I just wanted to reach out and see, like, are you guys looking at potentially moving anytime soon or refinancing, you know, in the near future? Just because we did get an alert that you had, you know, your credit pulled for a mortgage. Is there anything that we might be able to help out with? Right. And so it's
very straightforward.
Very straightforward, very simple. We don't try to beat around the bush too much. You know, there's obviously a reason that we're calling, and, you know, nobody's going to call out of the blue after not having spoken with someone for, you know, 2-3 years. But they know that, hey, I had my credit pulled. The problem that we're facing right now, though, is, and maybe you can help me figure out if there's a way around this, but I haven't been able to figure it out. But a lot of times when we have the mortgage inquiry pulls, alerts, not only are we calling the client, but like 40 other lenders are calling them too. So it's a lot of times it's hard to get through to them, right? Because their phones are getting constantly called for like a 24-hour, 48-hour period. One thing that we've been doing to try to combat it a little bit is it's honestly just waiting a little bit, right? Because when their credit gets pulled, that's when they're immediately getting bombarded with calls. And so we try to wait like 4 or 5 days and then try them then with a text and a phone call, just because, one, they're probably not getting spam called anymore. So they might be more open and, you know, receptive to picking up the phone. But that's, yeah, if there's anything that you can provide guidance on there, that would be super helpful.
Yeah, well, first of all, I would say you definitely want to try to be first. So,
okay.
You know, Jeremy, you know, this is his steps, you know, call.
Mm-hmm.
And we really advocate that you call all your alerts between 8 and 9. You know, you don't want to be the one waking them up in the morning, but you don't want to be calling in the afternoon. And by the way, that's just like every alert, like, you know, just like win by noon, you know, whatever the signals are in your database, the sooner you get on that signal, the better. And I would recommend really all three, you know, especially, you know, if it's someone in your database, call them. And the more you can call, like it's a service call, not a sales call.
Yep.
Hey, I'm calling to give you service, and email and text. So, you know, I interview a lot of loan officers, you know, some of the most successful loan officers in every company that uses Sales Boomerang. That's what they do. And the thing that they do is they're most consistent. They do this every day. First thing in the morning, I call my signal calls. And then, you know, the other thing, and I don't know if you guys are using this, make sure your team, maybe audit your team's process, that the insight that you're getting is creating a total cost analysis. So like in the case of a cash out, those are really valuable. This is where you know how much tappable equity that consumer has.
Yep.
And you can really have a very thoughtful call and deliver that wow with a presentation. So, go ahead.
I was going to say from like out of all of those tools, I think the debt signal is probably my favorite. We had a client a few months back who, we didn't know that they were in a tough financial situation. They had racked up a tremendous amount of credit card debt. Their child had recently, gotten into had some medical issues. And so because of the debt signal, we had actually found that, their debt was in like the worst tier almost. But we were actually able to reach out to them before she ended up going on disability leave with her current employer to actually get her refinanced, because she had built a ton of equity in the house over the last 3 years, get her refinanced, pay off all their debt. Their monthly payment was a bit higher than, obviously their interest rate was much higher, but their actual monthly debt obligations were significantly lower than what they had. And had we not had that debt signal and found out, because they didn't pick up our annual financial review calls. And so because of that, I personally reached out, because this was a client that I personally worked with. And we were able to actually get him out of a really sticky situation. And that was a huge win for us like 3 or 4 months ago.
So guys, I want to really pause on that, because that's everything. I mean, that is the difference between being a transactional loan officer and really being a mortgage coach, someone that is looking out for the best interest of your consumer. And anyone that's listening to this, the biggest advice I could give you is don't think about this as I'm calling to sell you a loan. You're calling to look out for people. First of all, if you are a mortgage coach and you're really giving people valuable advice, not just quoting them price, you've got a tremendous value. And when they run that credit report and they're getting all these, rate salespeople calling, trying to sell loans, you're the one trying to give support and advice. And the same thing when you see people using debt in an uncommon way, that is a family in need. That is a family to call in and check in with and listen to that. That was a family that if they wouldn't have gotten the call from Amit and his team, probably wouldn't have been able to get a loan.
They probably would have had to sold their house.
Yeah, they may have had to sell their house. I don't know enough about this story to just say how dire it was, but the most smartest mortgage professionals that are paying attention to the signals in their database, they're monitoring them with Sales Boomerang and Mortgage Coach, and then they're making service calls. You're not making sales calls, you're making like those alert calls in the morning is service.
Yep.
All that marketing, when you just again, you need to use your CRM, but when you just send out the same message to 1,000 people, that is, at best it's marketing and at worst it's spam.
Yep.
But when you get a signal and you make a service call and you help people with mortgage strategies, you're really helping families achieve financial freedom. So Matt, I'm not going to even ask for more, because I just want to let everyone just think about that. And here's the other thing I would tell you: for everyone that's got, 500 people in your database, there's someone that's hurting. And by the way, I just made up a number. I mean, it's probably at least 1 out of every 100 that really need you, and you need to know the signals in the database so you can be at the right place at the right time to help families build wealth with real estate, help families stay out of trouble. Any closing thoughts, Amit, that you want to share before we wrap this up?
Yeah, I think one of the things that I realized about Sales Boomerang, it's really allowed us to be a true savior for our clients, I feel like, right? It allows us to come in at the right time because we were notified at the right time as to when our clients truly needed us. And I can't tell you, like, it sounds weird, but I can't tell you how many times we've made a call to a client, right? And a client's picked up the phone and said, Amit, oh my God, I was literally just praying for an answer to our problems, and it seems like you've come with a solution. I'm so excited to talk to you. And, thankfully that's because the relationship we've had with the client in the past has been awesome, but if it weren't for the tools that we've implemented in our business, we wouldn't have those conversations. And so it's great to feel like you're a savior to a lot of people.
Yeah, no, I love that. I know our innovation team, when they hear this interview and they hear this story, this is it, guys. And that's the other thing I just want everybody to realize, this is not like a one-off thing. Credit card debt is exploding in America. Savings rates are on the decline in America. There are more families in your database right now that need your help at the right time. And it's not everybody in your database. It's, it may be 1 out of 100 people in your database. But there's a number of people that need you this month. Make sure that, between 8 and 9, the best practice every day of the week, look at signals in the database, make sure that those families are getting a service call from you. Make sure that when you do talk to families, you're really going beyond just qualifying them for debt. You're helping them achieve wealth with real estate. You're helping them achieve financial freedom. So, Amit, thanks you for being a leader in our community. I really appreciate you, man. All right.
Appreciate you, Dave. Thank you so much for having me.
If you are not following our YouTube channel, follow it, share this with your manager, share this with your mortgage friends. And this is a wrap. Take care, everybody.
Bye, everyone.